Hi, I'm Joe Saul-Sehy. And before we press play on today's episodes, just a couple things. Number one is today you're going to notice the show has a little bit of a different sound quality. And the reason for that is because our file was corrupt. And you may know, you may not know, that we've been very frustrated with some demons as we've worked to restructure the show. And we're super excited that this is a different demon. But then the same, it's another demon. So the file was corrupt. So today's show comes directly from the Facebook feed. And if you know anything about video versus audio, the sound's going to be a little different. We specifically record the audio separately, and we're pretty proud of our sound quality. That's not going to be the case today. But we felt it was important to still show this episode because of the fact that the headlines were so compelling. I especially like the second headline. That'll be funnier after you actually hear the episode and what we're talking about. But there's some great stuff in this one that Bobbi and I have. Second, with regard to those gremlins, we're so happy that we've had people reach out to us. I wanted to talk about actually how we make the show. When we have the audio file in hand, we work hard to do something called level it. We also try to put some sound controls on it because we've been struggling with recording in two separate places. Bobbi's not in my mom's basement like a lot of our Stacking Benjamins show contributors are. And because of that, we're really, really learning. And this just reminds me of when we made some big changes at Stacking Benjamins. Initially, it seemed frustrating for our listeners, and I'll tell you it was equally as frustrating for us because as Bobbi and I really get rolling on this project, we're super excited. We've got some great stuff in the hopper. You heard, I think, what was a great show on Friday, and we're geeked about the future. So this show, a lot of great content. Thank you for sticking with us as we've worked through the demons. I think we largely got them. But enough about that. Let's have some fun and talk money. All right, let's press play on today's show. Caden?
In our first headline, shopping online usually includes free shipping, but there is a hidden cost that most of us don't know about, and it may have you thinking twice before you click that buy button. And in headline number 2, numbers don't lie, but that doesn't mean the message isn't controlled. We break down the recent earnings from Energizer and pull back the curtain on how earnings headlines don't always reflect earnings reality. We will have both of those headlines plus a big idea tying them together on today's podcast. That and much more. Money in the Morning. Welcome to Money in the Morning. I am Bobbi Rebell from the Financial Grown Up Podcast.
And I'm Joe Saul-Sehy from Stacking Benjamins.
And this is the podcast where we cover 2 recent stories ripped from the financial press. And not only do we read them like some podcasts do, we get into why they matter to you, to your wallet, investing, saving, paying down debt more effectively, all that good stuff. Then we wrap it up in one big idea at the end of the show so you can be better with your money, not only for the rest of the day, but forever, right?
Amen.
And thanks to M1 Finance for supporting Money in the Morning. Check out a new kind of platform to manage your money. Easy rebalancing, clean interface, all created for a modern investor. And did we tell you it's free, Joe?
It's free. Shut the front door.
Head to stackingbenjamins.com/M1 Finance to learn more. Hey, Joe.
Hey, Bobbi. Welcome to Saturday. It's the weekend.
It is the weekend. It has been quite the week, hasn't it?
It has been another week of juggling and snow and freezing rain and hanging out with Bobbi Rebell, which is always the best part of my week.
Yeah. Well, it warmed up here in New York City, so I really can't complain a lot. So
no, that's yeah, I don't know where to go with that. Yes.
But I'm still dreaming of Florida. All winter, I'll be dreaming of warm weather in Florida and all those good things and all the cheesecake factories down there. So
Cheesecake Factory story that won't die. Well, maybe that's some other day. We will share
every fabulous restaurant in New York City. I'm still talking about the Cheesecake Factory.
That's it's like the Red Lobster of mid-price dining. I don't know.
Exactly.
All right, you ready to do some headlines today?
Where's Laura?
Oh, where is Laura?
Just when you thought the show couldn't possibly get better, it's time for your headlines.
You like how she chooses to say that one? It can't get better than that. I was talking about Cheesecake Factory, the weather.
That open.
I know, right?
Day 2, for those of you that are relatively new to the show, day 2 of a new format that we are incorporating into the show, and I like it a lot. Let's get to our first headline. Your online shopping, Joe, has a startling hidden cost.
My online shopping.
All your online shopping has a startling hidden cost. And this piece comes to us from Fast Money. The author is Elizabeth Segran. I'm very good at messing up authors' names, so apologies to Elizabeth for destroying her name, but I love your piece. And it is about what the true cost of online shopping. And it's not just that free shipping is baked into the cost, because that we kind of know that we're already paying for the free shipping. It's more of a long-term impact. So let's get to the piece. And it's sort of written in first person. When I'm browsing for a new outfit online, I instinctively scan a brand's website looking for the words free shipping and returns. And if I don't see a flexible return policy, I think twice about making a purchase. After all, it's risky to ask a customer to buy jeans or a button down on the internet. What if it doesn't fit? What if the color looks different in person? Here we go. Over the past 2 decades, e-commerce has grown rapidly. Today, 27% of apparel sales are made online. There is no doubt that being able to buy clothes online is more convenient than going to brick and mortar stores where you need to try on the garments in a public changing room. Instead, we've gotten used to browsing from the comfort of our sofa and trying on outfits in our bedroom. But part of the reason buying clothes online has been so popular is that many brands make it possible to return unwanted items without hassle or cost. But the catch is coming, because there is a cost. And by the way, 40% of all online clothing purchases are returned. But I'm going to skip around a little bit on the article because it's a very long article.
Yeah.
And it also talks about the fact that people buy outfits just to try them on and take it like a social media photo. And we don't really think about the cost. And so she talks about Fashion Revolution, which is a Belgian organization that is trying to make the industry more humane and sustainable. And they talk about the way that the real cost is on the highways of the world, where trucks are shuttling the goods to and from your house, polluting the atmosphere and contributing to global warming. And it's hard to pin down. The article goes on to say it's hard to pin down the environmental cost of returning clothes specifically, but evidence suggests that it is significant. In 2016, transportation overtook power plants as the top producer of carbon dioxide emissions for the first time since 1979. A quarter of this footprint comes from medium and heavy duty trucks doing last mile deliveries after goods have been transferred by plane and so on. So this is actually becoming, it's kind of everyone has gotten on board with this, but it's becoming a really big problem. Another thing in the article I just want to point out that they say is this demand for speedy delivery and returns, because we all want our 1 day, at most 2 day shipping, means that trucks are often less full than they were previously, Joe, which increases the carbon footprint of each individual item that you buy or return. And then, of course, you get to the whole thing that brands can't resell them, more wasted clothing and all that. It's a lot.
Even for people that don't care about the environmental piece of this, which I think we probably should care about the environmental piece of this. But for people that don't, just think about the cost. You know, they talk about in this piece, people that will buy, and I haven't done this before, and I should have. You mentioned 40% of all clothing that you buy online gets returned. I've certainly bought clothing online that I had to return, just didn't fit the way I thought or didn't look like it looked in the picture. And so people will buy 3 different shirt sizes just so that they have the one that fits. Right. I think about, by the way, Rent the Runway, which is a company I really like. That
Rent the Runway, by the way, what I am wearing right now, my friends, is Rent the Runway.
But I think it's so cool. And my daughter was all about that for her, when she had the big formal high school dances. It made so much sense to do that. But they send you 3 different outfits, right? One bigger, one smaller.
Well, I do the unlimited. So, Yeah. So I have a different thing where I'm constantly cycling. So I don't know. I have mixed feelings about this now because I feel like there's more shipping going on because I'm sending clothing back and forth. However, one of the tips they say at the end of the article, and I'll get to that in a minute, is one thing you can do to help the environment is just simply buy less clothing. So the fact that we're basically recycling clothing among different people is very environmentally friendly, but yet we are sending them back and forth. I do often, because I live in New York City and there is a store here, I do often hand deliver them into the store and pick out new outfits in the store. But still, you have many customers and sometimes me that are sending them back by mail. So I don't know. It's a kind of a tricky thing.
Well, I think that and to get to what my original point was that even if you don't care about the environmental piece, reading this, just the cost of these trucks going back and forth and stuff, we call it free shipping. Free shipping means the cost is baked into the product, right? And so the cost is driven up on the product as we continually send back this stuff, and trucks half full. I mean, that obviously also increases the cost of the product because the logistics are harder to get this stuff out. So it's funny. There's so many different costs that you don't think about with online shipping, and it's so easy to just click a button, and yet there's so many potential downsides. But I also think to myself, if I go to the store and I buy this, I'm kind of doing the same thing though, aren't I? Because now I've got a car that's half empty or mostly empty with one product in it instead of at least 10. So what's the answer?
I don't know what the answer is. And, the article also goes on to talk about the fact that, a lot of companies, let me just find this here. They've built in free shipping into the cost of products. And the article goes on to say, and consumers have come to expect to be able to return products easily at no cost or risk to themselves. So a brand that rescinds the free shipping is likely to put itself at a competitive disadvantage.
Sure.
So we're sort of stuck.
Yeah.
In that sense, because what do you expect the brands to do? I know that I certainly hesitate if something doesn't have free shipping. I'm looking for that coupon code to get the free shipping. So it's tricky because in order when the online, commerce was really starting, the big barrier was the shipping. People didn't want to pay for the shipping. They weren't able to try it on. So we got into this world where they said, oh, we'll just order, 3 sizes. I did that recently for my son. We needed dress shoes for a family event, and you order a couple sizes because you don't know which one's going to fit. And then you send one back. So I don't know. It's a problem.
You also think about all the packaging, recently just moving into a new house, we've had a lot of stuff that we purchased, and I've had so much packaging we take into the recycle center. And I just think, just such a waste. I think it just tons and tons and tons of waste just with one move, family of 2 moving from one house to another produced just this exponential amount of waste that was ugly.
And one of the issues I think that we need to pay attention to, and this is sort of a big picture, almost a government thing, is, or maybe some organizations, and I'll have some ideas from this article, is if you had been told, well, you're moving, here's what you do with all those packages so that they don't go to waste, you would have done it probably, right? But
Sure.
You didn't have the guidance, so you're throwing it away.
Well, and actually, we found out that there was a recycling center near us. And so we took all of these cardboard pieces and took them to recycling center. We made several trips to take them there. But even then, I mean, recycling centers still produce some waste. And I was thinking that a lot of these boxes, if I knew who was moving next, they could have totally used these same boxes that I use without even having to go through that.
Yeah.
I like here what people are saying. We do this for people listening. We do this in front of a live studio audience on Facebook. If you want to be part of the audience, head to facebook.com/iStackBenjamins. We do it on the Stacking Benjamins Facebook page. But Mike said 7% of online purchase clothing never gets used or returned. Well, you see those hoarding shows, right? And, we've both been watching the Marie Kondo shows. All these clothes that still have tags on them that are, buried, that people have, it just kills me. Some of the waste. I hadn't heard the 7% number, but I do know that 42.65% of all statistics you read on the internet are made up. So, so Mike might have
percentage, but how do we know that's not made up, Joe?
Another Bobby joke.
Greg says e-commerce is exploding in China, but I've heard they have very consumer unfriendly return policies. The first company that invests in the confidence of their consumers there is going to explode. That's interesting. Well, we'll see if it adjusts. We'll see. I think that initially when e-commerce started, they weren't as consumer friendly, but in order to really, gain traction, they had to have these liberal return policies or it just wasn't going to happen.
It's interesting. And these liberal return policies, to go back to the article a little bit, are very capitalistic, aren't they? I mean, it's competition. Sure. And if you're in China, where the competition is a little more limited, I mean, I wonder if that kind of drives a company's ability to stay alive and offer a return policy that's not quite as friendly. But on the other side, Bobbi, even though it's more unfriendly to the consumer, is it actually long-term better to have if you're going to buy this thing online, you better actually want it.
Yeah.
And, but then again, if it breaks or I don't know what the answer is.
Well, the article has 3 suggestions. So the first suggestion is basically going to what you said. So you were right about this, is know your size. Many brands are investing in opening or improving their brick and mortar presence. So basically the idea is go in once, know all your sizes for that brand, and then you can order the correct size and not have to be guessing. So that's one solution. The second solution that they suggest is to group your packages. And I don't know that we as consumers can control this because sometimes you order things and they separate them, but at least don't keep placing, just because it's free shipping, don't place orders for many small items, throughout the day, kind of group them together. And then the third one was, frankly, buy fewer clothes, which I think is happening with services like Rent the Runway. But again, those also involve shipping.
Yeah. Yeah. I don't know. Hopefully the Marie Kondo thing continues to help people go, do I really need 6 closets full of clothing? I like what Robert says here. When a truck shows up at his brewery, he works at a brewery. That's like my favorite job. If I was not doing podcasts with Bobbi, I would totally work at a brewery. But when a truck shows up at the brewery, we don't have any beer to load. We lose $1,000. I mean, that's so they've got to, they got to have the beer to load at the time that the truck gets there, or they're out a bunch of cash. That seems to create inefficiency too. But then again, if I'm the shipping company, I don't want to show up at the brewery and not have anything, not having the load. So there should, I don't know, should be a penalty. I like that idea though. Buy fewer.
These are big meta. These are big. So my takeaway from that is it's not always about you. We have to think about the environment and the big picture. And even though, right now you want whatever you want and you want to order multiple sizes, maybe take a little time, think about the bigger picture impact of the kind of ways that you shop and the things that you do in your everyday life and how that affects the bigger environments.
A mentor of mine a long time ago, Bobbi, said something that stuck with me forever, which is there's the short-term and obvious stuff that's right in front of you. Short-term and obvious is online shopping is easy. But then he said, there's always, you want to think about the long-term and not so obvious. And there's a lot of long-term, not so obvious costs to just clicking that button when you really don't know if you care or not.
Okay. All right. Should we move on to the next headline, Joe?
Let's do it.
Let's do it. All right. Headline number 2. Energizer raises full year 2019 profit guidance as Q1 sales fall short. And this is from, I think it was from MarketWatch. I somehow cut that off of my print, but it's by Sierra. Again, a very tough last name for me. I'm sorry about this. Linane.
I would say Linane.
Energizer Holdings said Tuesday it had net income of $70.8 million or $1.16 a share. I'm going to try to read this slowly, actually. Net income of $70.8 million or $1.16 a share in its fiscal first quarter to end December, up from $60.4 million or 98 cents a share in the year earlier period. That sounds good. Adjusted per share earnings came to $1.64, ahead of the FactSet consensus of $1.54. Also good. The battery maker said sales, here we go, fell 0.2% to $571.9 million, missing the $573 million FactSet consensus. The company closed on 2 acquisitions in the quarter, that of Spectrum's battery and portable lighting business and the auto care business. The company raised its fiscal 2019 adjusted EPS, that's earnings per share, guidance to a range of $3.45 to $3.55, which compares with the current FactSet consensus of $3.40. So they were already estimated to be right in the middle of that range.
And it's funny because when I read these things, when I used to read this stuff, I go, I don't know what any of this stuff means. Yeah. Like I got any of this. Yeah, so if you don't mind, Bobby, I'm gonna dig into some of these numbers. So, Energizer said Tuesday, like Bobby read, that it had net income of $70.8 million of net income. A lot of people think, wow, that's a lot of money to have as profit. Net income is not profit. That's just money coming in the front door. So the question then is, if I've got that much money coming in the front door, then what do I do with it? So these are the questions you still have. What do I do with it to make sure that I have some shareholder value, that we actually make a profit? So when I take a look at income, that's important. But I think for me, the more important number always is how much profit do we have? So, but we start with income. We start with, okay, here's how much money they made. And then the next line says that income, $1.16 per share. So they take the number of shares that the company has, divides that 70.8 million by the number of shares to get $1.16 per share. They often talk, and why is that important? They often talk about shares being diluted, Bobby, when a company like makes a purchase and they hand out shares, and investors often get angry about that. They're like, whoa, there's more shares. It dilutes the amount, especially if there's dividends paid out per share. The dividend will often go down. So especially in companies that pay a big dividend, people get worried about the number of shares that are outstanding, which is why they talk about the amount per share. In its first fiscal quarter to end December, up from 60.4 million. So 70.8 million is what they had now. 60 is what they had before. Pretty darn good. You know, they went up $10 million during that period. And then they talk about adjusted shares, and adjusted shares means after a bunch of one-time exceptions. So after a bunch of exceptions, they adjust that number. You know, we don't even need to get into that. Whenever I go to adjusted earnings, I go, okay, if there's a big difference between adjusted earnings and earnings, I want to dig in further to see why they're adjusted a lot. So a lot of times this will bring up questions for me when I'm looking into a stock, like, why are those numbers so different? And I'll write that question down and I'll dig in later to see what it is. And it turns out, by the way, that they had closed on some acquisitions during that quarter. And that can be a reason why the earnings are adjusted.
And those could be a very good thing going forward if that is something that you believe was a good strategy for their business.
Yes, absolutely. So, and it's also something that, they bought these businesses. What do these businesses do? Are they businesses that are in line? But sales fell. So then that actually brings up then the next question, which is, how did you grow your income by $10 billion and at the same time have your sales fall? So if sales fell, are you selling more to the same, are you having bigger sales to the individuals? Like if I'm selling something to you, Bobby, am I selling to fewer number of sales to you, but every transaction is a higher number?
Right. Well, I actually went to the company website and I also looked at Seeking Alpha, which had a transcript of their earnings call. And I found when I was a reporter, I was a television reporter, so I didn't always have to do it right away. I usually had a little time. You see these little flashes coming through the news feed, whatever you're looking at, but you don't always get the actual information. So it's always good to look at what the company says in their call. And also people ask questions. And in that, they talk about the top line performance. They talk about the revenue growing 1.7% and so on. But then they say, we implemented pricing actions in 11 markets. These increases were offset. Here's the problem: by increased retailer promotions and unfavorable mix. So basically people were putting things on sale. So they were not making as much money on each sale. And that answers the question that you were raising.
Well, and this is the thing. Notice how, as we just go through the first paragraph of this, we don't need to go into the whole thing. I knew a lot of people that bought individual stocks and they would just buy them because the person at the table or at the chair next to them at work bought it, or they buy it because they heard somebody on CNBC say it was a good deal. We just read the first paragraph and we've already come up with some questions that you want to get answers to. What are these companies that they bought? What are they, how did they grow the earnings per share while sales actually fell? How did they do that? You bring up all these questions. Buying an individual stock will still always come down to a gut check. If you're going to play that game, it's going to come down to a gut check. There's going to be this leap of faith that you have to make where it's either a good deal or not a good deal. But look at how much more information we already are starting to have about this company in a 5-minute conversation than the average person who goes out and buys a stock.
Well, and the information is all there right on the company's website. You can get so much. If you go to the Energizer website, I checked their WebEx is right there for the public. You can go and listen. If you want to spend an hour or two and listen to what they say directly, you can hear, how they present it, how they try to manage your expectations as an investor, potential investor, and the questions that they get from the people that are participating in that. And that often sheds light, because even if you don't know what to ask, there's other people that do. And they will get on those calls and ask the tough questions. And then you will get the answers to questions you didn't even know to ask.
Yeah, it's so cool that this stuff's out there, and yet so few people use it, and they still go buy stocks just based on what somebody said. But I want to turn this thing kind of on its head, because I like this, and you and I had a kind of exciting conversation about this yesterday when we chose this headline about how companies do this stuff. They talk about the last quarter and this quarter. Imagine if we did that as families. Like, how cool would that be to say, as a family, we made X amount of money and we spent Y amount of money. Next quarter, we're going to do this.
Right.
And you think about companies do this, like these people have this job, a CFO, a chief financial officer. Their job is to figure all this stuff out. What are we going to do next quarter?
Right.
And it's so hard to do that for a business. And when I think about individual families, it's so much easier for families to do that. But I bet if you're listening to this, are you doing that? Are you predicting where you're going to be at next quarter? And I know the answer for 95% of people, it's no. Got no idea.
You have a lot of things that are known, and there's a lot of software you can use out there to see the pattern of where your income is. And if you have a job with a steady paycheck, you basically know what your income is going to be, and you should know what your big expenses are. And the ones that aren't big are generally things that you can control.
Yeah, we're going to have a one-time exception because we're working on this room in our house. We're getting flooring in our house.
You're getting very fancy flooring.
So we know there's going to be a one-time exception on our earnings, and you probably don't want to invest in the Joe and Cheryl company this next quarter.
It'll be fantastic, though. The quality of life benefits are going to be priceless, Joe.
I love this side, which means our stock's going to go up over time. Absolutely. But when we talk about this stuff, the CFO also later on in this piece, I want to dive down a little bit further. The company raised its fiscal 2019 adjusted EPS guidance. So
but it's still the previous estimate from FactSet was actually the middle of where it raised it to. So you've got different people telling you, there's lots of voices in your ear, and it's all these, you could just say whatever you want to say because it's the future.
Right.
So, who knows? I mean, they're raising it to where other people, third parties, already had it.
Right. And I'm thinking,
but people like that.
Well, investors have liked it, and the stock is up. But I think to myself, and this is a question I have, and I don't know if this is a good stock to buy or not. Number one, and we're not making a stock recommendation. We're not making any type of recommendation. But the question here is, your sales were down because retailers were discounting your stuff. Why were retailers discounting your stuff? Why were sales down? And now you're telling me that next quarter is going to be a lot better, which brings up the next question: how? Right? Which investors, I'm sure, on that call.
And I don't know if people asked that question on the call. I didn't listen to the whole call.
Yeah.
I don't know what's the change. I mean, they're making acquisitions, and I do know this is interesting. And a totally sort of off topic from their earnings, but maybe not. They are in the phone business. I didn't even know that Energizer made phones, but they do. And they're coming out with some new phone models. So maybe that has to do with it a little bit.
They're in the bunny business.
They make phones. They
make Energizer. Don't they make those Energizer bunnies? No.
Yeah, those do.
Yeah.
Those are collector's items for people like you.
Lots of good takeaways here. I love the number of takeaways that we can get from. I get really excited when I see these quarterly profits, and it always makes me excited to go do my budget. I get super. I'm like, you know what? Comparing myself to a CFO makes me take my personal budget much more seriously, and I don't know why. Because really, when you think about the company you work for versus your financial picture at home, like which one's more important? Probably the one at home.
Yeah, absolutely. That's where it all comes down to. For my takeaway, I think this is about managing your own expectations and understanding what's going on when you make an investment, that you are realistic about what the company's going to do. Like Joe said, with a gut check. I mean, at the end of the day, they can tell you all of this. I think if you're going to invest in individual stocks, it makes sense to go listen to their their earnings calls. I think it's a great way to learn more about the company and where they're headed, because you will, in almost every case, get outsiders asking questions.
Well, and I like this idea of another take on your takeaway here, Bobbi, is managing your expectations the next quarter. And the better way to manage your expectations for the next quarter is actually know what those numbers say for you and your family.
Yes, I love that. All right. Do we have any guesses on the big idea?
We got a few. Mike has one. Michael says he wants to buy some flooring stocks now. Yeah. Now that you know that there's a big buyer who's
exactly
who's buying a few square feet of flooring.
Yeah. All right. Big idea prediction. This is from Mike. Big idea prediction. Sales don't equal profit. Amazon purchases have returned. Energizer sells less batteries now. Kids buy less battery toys.
Maybe.
Well, I think a lot of they're playing on their phones and those get charged.
That might be. That might end up being. Let's talk about M1 and then we'll see if Mike's right.
Yes. Well, actually, M1 is interesting because a lot of people shy away from buying individual stocks because it's very frustrating. You may not have the right, in order to properly diversify is what I wanted to say, Joe. It's pretty difficult, but you can buy individual stocks through M1 because they let you buy fractional shares. So that's a good way to get started if you are interested in buying individual stocks after you have done your proper research, Joe.
There used to be, a trading cost when I was a financial planner. There was a trading cost. And if you bought individual stocks to diversify correctly, you'd want to have maybe 10, maybe 15. And if there's a trading cost for each one of those, diversifying your portfolio was difficult, which is why so many people use mutual funds and ETFs. Right. And you can still use it.
Oh, sorry, go ahead.
You can still use exchange traded funds at M1. And that's what I do in my M1 account. I use M1 myself. I use exchange traded funds. I have a couple individual stocks there, but not many. But it makes it much easier to diversify your portfolio because of the fact that trades are free and you can buy fractional shares, which means that you set up these individual pies based on your goals. And when it comes time to rebalance your portfolio, you hit one button, and because it's based on percentages, it will automatically rebalance you to the balance you want to have. So if you want to be 50% stocks, 50% bonds, let's say, it's a horrible allocation, by the way. But if you wanted to be that, and let's say stocks have done well and now it's 60-40, you hit one button and it sells enough of the stock side, moves it over to the bond side, rebalances it. All these moves would take a ton of trading costs and imagine the math you have to do. But here you just press one button, it's done at M1 Finance.
Very good. And if you want to check it out, you can go to stackingbenjamins.com/M1 Finance to learn more. And if you sign up, we get a little thank you to help support the show. And so we thank you for that.
Here we go.
All right. Are we going to the big idea, Joe?
I'm tingly.
You're so excited about the big idea. All right. The big idea is short-term plus obvious versus long-term plus not so obvious. So this relates to both of our stories, Joe, because with the clothing and you're ordering it online or whatever you're ordering online that's being trucked around and creating all this extra carbon monoxide, we are thinking short term, which is obvious that we see all the benefits of our convenience, but we're not thinking about the long-term implications, including the financial cost to us, because it does raise the cost of our clothing just on a personal basis. It does get baked into the price. And then of course the environmental cost is also a real thing. And then of course, when it comes to investing in stocks, it's really important not just to look at the short-term data that they're giving you, but also to look at the bigger picture, which you can get, as I said, by doing a little more digging into the company and taking the time to learn more about what they're saying.
I think it's a great place to leave it.
All right. Thanks, Joe.
Thank you, Bobbi.
And if you want to be I messed up my tagline. If you want to live a rich life, be a financial grown-up. I'll get it one day.
Go stack some Benjamins, everybody. We'll see you back here next time at Money in the Morning.
Money in the Morning is created by Joe Saul-Sehy and comes to your ears because of the collective genius of our producer, Richie Rutter-Reese, engineer, Caden Thompson, and a pack of very well-trained ferrets here in the basement. You'll find links to all of our headlines featured on today's show in Joe's Twitter feed at @AverageJoeMoney. I know you already know this too, but Money in the Morning is for entertainment purposes only, and you shouldn't act on anything recommended by a bunch of entertainers in a basement without first consulting with your financial advisor, and second, having your head examined. Have a headline you'd like us to discuss? Send them to Joe at stackingbenjamins.com or put them on our Stacking Benjamins Basement closed Facebook group. This show is copyright 2018 Stacking Benjamins LLC, all rights reserved. I'm Joe's mom's neighbor, Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.